Hello everyone. Stocks kind of ran into some short-term resistance today. We're going to start out with the New York Stock Exchange as it was down 0.74%. You can see that volume was slightly higher than the day before, so this is a distribution day on the New York Stock Exchange. It is also a distribution day on the S&P 500 with it being down 0.58%. And as you can see, that 200-day moving average is resistance along with the July-August early lows here. So it's going to be, I always said that this recent uptrend has not been ideal for me at all. Individual leaders have been lame. Today, before the market even rolled over at the end of the day, my current holdings indicated that something was wrong with the market rally intraday, as I had a lot of weak action early on compared to the overall market, and by the close that did show up in the indices. So it's going to be interesting to see how stocks act here. But we seem to be in short-term resistance. Once again, though, volume wasn't huge. It wasn't a huge rejection, so I'm not completely worried now. And as you can see on the oscillators down here, and you can see more so also with the stochastics, we're starting to get pretty overbought. Now I'm moving on to the diamond, the SPY, the QQQ stochastics, and the Russell 2000 IWM. So you can see that we're starting to get into some, overbought territory on these overall. It's not too bad, but, we're at key resistance levels. The NASDAQ reversing right at the 200-day moving average. The NASDAQ 100 got back above the 200-day moving average, but with the lower volume retake also of that moving average, hard to have a whole lot of faith that it's going to hold through this price congestion area of the July-August highs. So we'll see how it reacts. I mean, easily, we start to pull back. We do it on lower volume the entire way below average. Yeah, I could see a successful retest to the August-October lows, and then maybe we blast off higher. However, the Russell 2000 is a little bit more of a precarious situation. It's reversed hard at the 50-day moving average. It's lagging, and remember, this is the index you want to see leading, yet it's the one lagging. So not another good sign that it doesn't always mean that, oh, well, we've sold off going in October, we found some lows, and we're going to rally here, and we're definitely going out to the end of the year. Doesn't mean that happens. We could easily continue to chop around, and then maybe we rally into December, January, February, March, maybe. But, that's not a given, and the technical landscape isn't that great. So with the indexes looking like they do here, with the Russell 2000 looking like it does there, what we're going to go ahead and do is we're going to initiate a hedge against an SRTY. I've made a crucial mistake with my holdings, and I moved up my final sell stop to just below 28.28. And unfortunately, intraday, it dipped down to 28.13 on the 20th, so I got knocked out of it. But if you didn't and you still have some, it's a 1.25% add signal. If you were like me and you screwed up by moving up your stops too tight because you thought the market was going to break out, this is a 2.5% long signal. So yeah, it's cost me, a few dollars here and there, but whatever. I just want to make sure that I have my position back on at SRTY. And once again, I'm not chasing it. So if it gaps up beyond 30.08, guess what? It'll go without me. We'll be cutting losses and we'll be major in cash. And if the market does crash, it's going to probably crash without me unless I get a signal somewhere else, which I doubt. I really doubt it, man. I think that it's very bearish out there. I see the sentiment cross on the Investors Intelligence. AAII had very low amount of bulls for a long time. I just saw something today with the positioning in the S&P 500 futures being very, very, very bearish. A very heavy amount of puts or short position, the S&P 500 futures. I don't remember what I read, but it's very low, and it's indicative of a market that's probably not near a top. So I really don't think we're going to crash wide open. I just think, if anything, we might retest these lows again of October, and in the other indexes, the August lows, maybe we do roll over. I don't know. All I know is that right now we're range bound. Things are not clear. Volume is mixed. A lot of below average volume means a lot of below average price action. And that's why, besides our hedge in SRTY, it should be no surprise that we have some sells. But what's funny is that all the sells today came on that day when I initiated. I think that was on the 16th, on Friday. I took 3 speculative long positions, very small each, and each of them were, I risked so little that I had to take them, is how I saw it as a trade. But what's amazing is that a big tell in this market, you can tell a lot about how your longs act. This one is a food stock, an AGRO failed. I used these 887 as a final sell stop, and obviously moved below that, closing at 884, so it's a full sell. But you can see that pattern there. It was a pretty bullish pattern, but it failed. I mean, it wasn't perfect, but it failed. And then RDY, a totally different sector, totally different kind of stock, worked immediately, but then it failed. Okay, so we got a food stock, a drug stock, and then what was the other failure? VET. So these are defensive industries that, by the way, were the strongest industry short term. Drugs, food, oil. Drugs, food, oil. These are your leaders. And yet these are how three of pretty strong looking technical patterns with decent fundamentals. None of these companies are great, but there's this fundamental support to agree with the technical price action, and yet they all fail. They all cost me very, very, very little, very, very small losses, and VET would have been the worst, but because following our signal date, we got a gap down, a good price fill. It's not that bad, but it's amazing to see that all of these failed. And then also, an ETF has fully failed, EWC. Remember, technically it was 100% sell if you wanted to be with the move below 24.41, but I figure with the low volume sell off below the final cut loss level, it could just be a 50%, and then if it closed below 24.31, then it could be a final cut loss. Today it did that. Now with me, what I'm going to do, since I didn't change my final cut loss from that one initial sell stop, which I should have, but I did not, today's low day now becomes my final sell stop. So it's going to cost me a little bit more, but once again, it's not that volatile. It doesn't hurt that much. I'm already out of half of it, and it's only going to cost me about 1.5% of the account capital in that position. But pretty interesting. Once again, all those speculative stocks, none of them were great. So once again, hopefully you guys didn't trade them. Me, I'm always going to take a small position in a setup like this because these losses don't hurt. Missing out on big gains hurt. But VET, RDY, and AGRO all failing. Kind of big red flag. And a recent long before that, Twitter has basically failed, but it's still holding up there. You can sell all of it to move below 28.65, but I'm going to continue to use 28.38 as my final sell stop because, once again, it's a small position. It's only 1%. I didn't risk anything, much. And FIX and BYD, they were working, but immediately reversals. And let's look at some of the current long positions we have that had some pretty adverse price moves today. But remember, lower volume, so they could easily reverse again. BCO, DY, and CTB was probably one of the worst as it's on heavier volume. And with CTB, what you can do is, I'm not sure, but I think I have a half my sell stop below 41. No, I must not. So I believe then I have a full sell stop here at 39.13. If that is the case, or if it's at 38.78, what I am now going to do is this. So one sell stop, half my sell stop below 41.28. So if it moves below 41.28 tomorrow, I'm out of half. And then the other half of the sell stop goes all the way back down to 37.88 to give it some room to work in case it does pull back to that pocket pivot point signal and then bounces. I don't want to be cut out of it and feel stupid because PDCE, I moved half my sell stop to just below these lows, 57.67 from, I think it was, they were all back here, and I moved half of it up to there, and you can see intraday today it cut it before reversing and then moving higher. So hate it when that happens, but in a range-bound market, that's going to happen. And then BFIN is a 50% sell if it moves below 12.41 intraday tomorrow. So I'm going to have half my sell stop. I'm still going to have half my sell stop at 12.40, and then my final sell stop is at 12.10. So, but BFIN, if you don't have one, I would definitely make 12.41 and 12.40, at least half of it. But outside of those stocks, look at how well EROS continues to do. Man, oh man, oh man, oh man. 42%. A trade I forgot thanks to the New York Mets. Was it worth it? Yeah, maybe. I don't know. But damn, in 1 week, 42% gain on a short position that we were all over even before that. I mean, you remember back here I was saying it was going to be a great short at some point. Didn't work out so well here, but boom, what a signal. Unbelievable. Unbelievable with IB having shares. KIRI is my favorite current pump and dump short sell candidate, but it's not on these charts, so I can't show it to you. And also no shares at IB. And I'm also thinking about possibly setting up a buy stop in AMWD. We'll see how the market reacts tomorrow.